Hi everyone, welcome to Three Crowns Trading. We're looking at gold again today. Please click on the subscribe and the like button below to support our channel. And if you're interested in doing any trading courses, we have courses available on Udemy. See the description below. Okay, so we're looking at gold again, and it's been quite an interesting week with gold because we had this big decline in the gold price over here, but then we popped back up to this line of support here. So it's going to be interesting next week to see what happens. There's a few things that could happen. One thing that could happen, we may find that the gold price stays above this line of support and does something like this. We may find it drops back down below this line of support and then finds another line of support back here. We don't foresee the gold price dropping below there though. Okay, so what we're going to do today, we're going to look at some gold producing companies, and we're going to look at their share price in terms of the basic statistics of their share price and their share price relationship compared to the current gold price. So here's some Australian companies. We have Newcrest Mining, Northern Star Resources, Evolution, Silver Lake, Perseus and Regis. So have a look down here. Regis, its share price is 46% below the current gold price. And if you look here, this is the year-to-date chart. So from the year-to-date, the gold price is down about 5%, but Regis is down 46%. The next biggest loser is Evolution Mining, down 25%. And then we have Northern Star just above that, down 24%, and so on. So these are some of the biggest producers in Australia, if you like. Let's have a look at some more statistics now. So if we look at all of these 6 companies that we just showed you, the PE ratios of most of them, of all of them actually, are quite good. Debt to equity is quite reasonable. Dividend yields are quite reasonable. And this is the gold price now. This is their current share price. And if you look here, we like to buy companies that are closer to their 52-week low in terms of their share price rather than their 52-week high over here. Most of these are, with the exception of a couple. And the other thing we look for, are there institutional investors investing in these particular stocks? And if you look at all these charts here, we have quite a high percentage of institutional investors investing in these stocks. And here's the share price compared to the gold price. The gold price is down, I said, already 5% for this year. However, look at this. Regis is down 46 compared to the gold price. Some of them are actually up. Perseus is up. The rest of them, though, are down, and we give them a rating out of 10. So these are the ratings, 10 being the highest. Regis has got the biggest rating out of these particular Australian gold producing companies, and Northern Star the second. Even a 7 is very reasonable though. A lot of gold companies are getting punished unrealistically right now, we feel. And however, these two statistic wise are the best options that we can foresee right now if you're looking to get into gold stocks in Australian gold producing companies. Okay, let's look at Canada now. So some Canadian gold producers. Yamana is down 31% compared to the gold price. Agnico is down 27%, Kinross 20, Barrick 19. So these are the top 4 in terms of discount compared to the current gold price. If we have a look at their statistics now. So Barrick, PE decent. Debt to equity is okay, dividend yield's okay, it's closer to its all-time low than high, it has institutional investors. So we've gone through all of these 6 Canadian gold producing companies as well, and we've given them a rating out of 10 again. So the best one there being Barrick Gold, and the second best for us being Kinross. We like Yamana, but the only problem we don't like is the PE is getting a little bit high. But most of these companies, as I said earlier, even a 7 is a good result. But we're looking for the best value that's going to have the best upside. So there's your 6 Canadian gold producing companies. And let's look at the USA now. So USA, the most discounted stock out of these is Gold Resource, and then you have Vista. The others are sort of tracking the gold price, so not so much upside possibly foreseen there. If we look at statistics for those companies, it was difficult to find a PE for Vista, so we're a little bit wary of these particular stocks. And most of these companies didn't get a rating out of higher than sort of 6. Main reason being that they're sort of done so well already. So we found it hard to find some sort of safe value in American gold producing stocks at the current moment. And South Africa, though, here's some South African gold producers. So down here, Harmony was the best. It's down 22%. Remember, the gold price year to date is down 5%. Anglo Gold down 18%. And then you have some other random ones here. If we look at their actual statistics as well, The best ones we feel out of these particular South African gold producers, Harmony Gold has a great PE, as does Anglo Gold, and debt to equity, a little bit high here for Anglo Gold. Dividend yields, fine, and if you look here, there's a discount of 22% and 18% for these particular companies. They are closer to their all-time low than high, the share price, and you do have a decent amount of institutional investors. So we just looked at gold-producing companies that operate in Australia, Canada, USA, and South Africa. If we look at them all now, these were our best picks. So our top picks, if you were interested in getting into the gold area and making an investment in a gold-producing company, if you feel that the gold price is going to increase in the near future, as we do, then these are the companies we recommend. So Regis Resources was the best for us. We gave that a 9. It was down 46% compared to the gold price. It has a great PE, dividend debt to equity is fine, dividend is fine, and it's really close to its all-time low than high, and it has quite a decent amount of institutional investors. Our next pick from Australia was Northern Star Resources. Again, all of these stats are quite good, and it's 24% discounted compared to the gold price. We gave that an 8. Our best picks from Canada, Kinross Gold and Barrick Gold. Again, most of these statistics, all of these statistics are very good, and 19%. We really like this. This discount can't go on forever. There has to be some sort of convergence between the gold price and these gold producing companies' share prices. In terms of South Africa, these are the two companies we like the best. Harmony Gold down 22% compared to the gold price, and Anglo Gold down 18%. So if you are interested in getting into gold, if you feel that the gold area is going to increase in the near future, as we do, then these are the picks that we recommend. However, you wouldn't just jump into these stocks from these statistics. These are the initial research areas that we do when we look to invest in a particular company, but then we do a lot more research than this. So if you wanted to get into any of these particular gold companies, you would want to do more research. You would want to look at things just like do basic statistic comparisons, which you've done, but you'd want to look further into things that are company specific. So things such as reserves, gold reserves, are they increasing? Are they decreasing? Are the directors of these companies buying in right now? Because you'd think if the share prices are so fantastic, why wouldn't the directors of the company be buying into their own company? Are there any capital raises on the horizon? Obviously, if a company does a cap raise, they often issue more shares, and that's going to dilute the share price. Other things to think about, sovereign risk. So those South African companies look the most fantastic statistic-wise, but you have a bit of sovereign risk there. And I would investigate a lot further into whether you feel that the gold price is actually going to go up or down in the future, because that's obviously going to affect the share prices of these companies. So the last thing, we find we're at this perfect storm right now for the gold price, because we've got a few things happening right now. We've got Basel III coming in to effect. It's already come into effect in most countries, but it's coming into effect in January in the UK, and the UK is the biggest trader of gold and the biggest storer of gold in the world. One thing that happened recently that really supported the gold prices is the rates staying put. So the USA and the UK just mentioned that they're going to start tapering, but they mentioned that any sort of interest rate rise is years away. So that's really supportive of the gold price, because even though the tapering could be detrimental, stability right now is really important for the gold price, and the rates are the most dangerous thing for the gold price. The other thing that we looked at earlier, and I mentioned, those stock prices of those last 6 companies particular are at a huge discount to the gold price. So if you feel that the gold price is going to increase, you would expect that those companies would move up with it and even come further into line with those particular prices of the new gold price. And the other thing that's going for us is money printing. Obviously, money printing creates inflation because there's more money flying around. And even though tapering is occurring, the States is going from printing $120 billion a month to only 90. It's still increasing the money flow. So for us, right now, gold is a really fantastic place to be, and those particular gold stocks present really fantastic value right now, and that's where we're looking for our company.